What's up, guys? We gotta chat about Coinbase today. Their stock is going to launch any week now, and I know you guys are itching to get your hands on some sweet coin. I've been debating with myself for several weeks now how I'm going to play this. Am I going to smash that market buy, wait a couple weeks and see where it settles, buy some options on it, or just stick with crypto instead? There's a lot to consider here, and I've been doing quite a bit of research on this. So if you're thinking about buying some Coinbase, you gotta watch this video because I'm gonna break down for you why Chamath is worried, the bull versus bear case, and a fun price prediction from yours truly. Strap in, my friend, it's time for the deep dive. Welcome back to BFB. I'm your host Kevin, and in this channel we focus on deep research and honest opinions to help you get that long-term edge in the crypto space. If you're watching this and you like what you see, then please destroy that like button because that would help me out so much. Okay, so Coinbase, let's get caught up to speed real quick before we debate whether or not we should buy. Coinbase was a pretty OG crypto company started way back in 2012 by Mr. Brian Armstrong. You know they were OG because Bitcoin itself just launched a few years earlier in 2009. That means these Coinbase guys were true visionaries because if you can imagine in 2012, that was when Bitcoin was less than $100 and everybody thought it was a joke. I'm not gonna lie, I did too when I first heard about it. Fast forward a few years and Coinbase really grew up to become the biggest and best US-based exchange. In 2018, they raised a venture round that valued them at $8 billion. That went to 28 billion, 50 billion, and now over $100 billion as they did a private placement on Nasdaq. A lot of the earlier valuations were guesstimates, but now that their S1 is public, we can check out their cold hard numbers. This is going to make the whole picture much more clear. So through their existence to 2020, they had 3.4 billion in revenue, with 1.3 of that coming in 2020. They made most of their money from transaction fees, like I'm talking 96%. This is not surprising, right? We get charged up the wazoo by Coinbase fees. Their growth is stellar though. They had 534 million in revenue in 2019. So just in the span of a year, they doubled their revenue. Now, what's really special here is that Coinbase was actually profitable in 2020 with a net profit of over $300 million. I say this is special because how many other recent IPOs were actually profitable? We've seen so many companies get pumped up to insane valuations without ever turning a profit, or even worse, never generating a single dollar in revenue. Virgin Galactic. Some other eye-opening stats are 43 million in identity verified users, not those fake accounts that other overseas exchanges have. 2.8 million of those are actively trading on a monthly basis. They've also done over 450 billion in trading volume so far and hold an insane 90 billion in assets on their platform. Fingers crossed, toes crossed that those never get hacked. So everything sounds rosy so far, right? But recently our degenerate-in-chief Chamath sounded the alarm bells on Twitter with his reservations about Coinbase. It wasn't because of the revenue numbers nor their overall business, but about the way they are going public. That's through the DPO, or direct public offering. He writes, the Coinbase direct listing will either confirm direct listings as a reasonable on-ramp for companies or kill it altogether by making retail the true back holders. If institutional investors use this period to manipulate the stock from 54 billion to 100 billion now, and then sell it to retail at 100 billion or greater, it will be the ultimate form of stock manipulation. If the stock snaps back to a much lower valuation, each private transaction preceding the DL seems manipulative. Good luck to all the players. I'm sitting out. The process stinks. You gotta keep in mind though, Chamath may be a little biased here since he's the king of SPACs, or special purpose acquisition companies. SPACs are a relatively new way of bringing companies public that lets everyday investors get in earlier than we ever could have before. Some people hate on SPACs because we're essentially buying shares of mystery companies and we don't know what we're going to get. This probably flies in the face of the whole basis of the Securities Act, right? But on the other hand, some of us love SPACs because without them, we'd have to take the leftovers after those wretched investment banks get first dibs pre-IPO at a much lower share price. We've seen this happen over and over and over again. Banks get in early and on the first day, share prices double on us. Anyways, Chamath is probably upset that Coinbase is listing directly rather than using a much better vehicle, the SPACs, in his opinion. If the DPO goes well, other companies might want to do that instead of working with Chamath. Who knows, he might have even pitched them on it but got rejected. To be honest, I think Chamath's fears are overblown. I think Coinbase will do just fine and prices will hold steady or even appreciate after listing. Now, why do I think that though? Let's shift gears a bit and take a look at the top reasons to be bullish and buy Coinbase shares or ticker symbol COIN. Number one is that finally there's a blue chip company in the crypto space going public with positive cash flow, making it much more amenable to Wall Street and your everyday non-crypto investors. Think about it from their perspective. Maybe they don't like Bitcoin and that's fine, but they realize that other people do love Bitcoin, so Coinbase shares could be a great way to bet on that trend. This is similar to Warren Buffett not liking gold, but still buying shares of gold mining companies. Number two reason is that Coinbase actually has two separate things going for it. First is Bitcoin's price, and if Bitcoin's doing well, then Coinbase will also do well since they're so closely tied in the mind of the masses. And the second thing is just if their company's numbers are good, let's say they continue to make a lot of profits and hit their growth targets, then that's yet another reason for people to be bullish on their stock. I think that if just one of these things happen, then coin will still appreciate in price. And if both are happening, then look out, we're ready for takeoff. Number three is just that we're in a super frothy market right now and everything is blowing up. Heck, we even saw dating app Bumble rocket to a $10 billion valuation once they IPO'd. Markets are hot and it's a hype-driven world. And one thing you should never underestimate about the crypto world is the amount of hype that we can generate. So even if Coinbase opens at a 100 billion valuation, I wouldn't be surprised if we saw it double or even triple in the months after. My point here is, if companies with less hype and less fundamentals are doing 60 to 100% gains, then wow, I don't even know where Coinbase could be headed. Let me know down in the comments how you feel about my 3 bullish points, but right now, I want to take off my rose-colored glasses and try to put on my bear hat for a bit. Actually, before I get into that, one thing that Coinbase doesn't currently have is a crypto debit card. But in the meantime, I've been happily using mine from crypto.com for 2 years now. They're also our longtime patrons for this channel, so shout out to them. And if you want to get one of those too, that I highly recommend, then use my link below to get a sign-up bonus as well. Now, my first bearish reason is actually a very similar point to something I mentioned earlier. And that is that Coinbase performance may be closely tied to Bitcoin. So it cuts both ways, right? What do you think happens if Bitcoin starts a multi-year decline like we saw in 2018 and 19? This hits investor sentiment hard and people just lose interest in Bitcoin. That means less activity, so Coinbase makes less revenue too. I gotta say, it's great timing that they're listing right now during the middle of a bull market. Second reason is regulatory risks. Yes, crypto is way more mainstream now than even a few years ago, but a lot of things are still up in the air and in a legal gray zone. Did you know that Coinbase spends millions of dollars in compliance? They're probably one of the most compliant companies that I've ever seen. But what if the SEC cracks down hard, or the Treasury or other agencies make a prohibitive ruling? Remember, just a couple months ago, FinCEN made a proposal that all crypto businesses need to have much tougher customer identity reporting requirements, and people were super worried about that. Or what about Ripple? Their case against the SEC is still open, and don't forget that Coinbase listed XRP for a long time before finally suspending it. Point is, Coinbase could still be affected by regulation even though we're over a decade into Bitcoin by now. Number 3 reason is that there are disruptors within the crypto world. So Coinbase is centralized, which is necessary for a great user experience, but that kind of also goes against our whole vision of decentralization. A couple of years ago, I'd say you were crazy if you told me that one day decentralized exchanges were going to replace centralized ones. But now I can see a path for that to happen. Many DEXs have done as much, if not more, trading volume than the top centralized ones. Now, I want to be a little bit more nuanced here because I think there will always be a use case for centralized exchanges. But my point is, they do face steep competition from DEXs in the future, and that may eat into the revenue streams. My last reason is just a quick note on security. So far, Coinbase has been impeccable in terms of exchange security. They've never been hacked nor lost user funds. And you can't say this about most exchanges out there. But that's always a looming threat in the back of our minds. Hackers love crypto because once they steal it, they can vanish without a trace. And they have 90 billion reasons to attack Coinbase. You can be sure that someone somewhere is attempting to breach Coinbase as we speak. The good thing is that Coinbase probably has one of the most advanced security systems in the whole corporate world. A couple years ago, some hackers utilized a zero-day exploit to attack Coinbase, but they were stopped early in their tracks. Other lesser exchanges would have definitely fallen prey. If you ask me, Coinbase will be fine, but you never know when it comes to these things. Okay, so the fun part, price predictions based on everything we know. Personally, I think Coin rockets to a 150 or even 200 billion market cap on its first day of trading. Then it drops down for a bit for a month or two, back to about 100 billion before starting its next climb. This may sound crazy right now, but I'm calling for a 500 billion market cap Coinbase in 2021 while Bitcoin shoots up to new all-time highs. Just think about it, if BTC goes 5x right now, it'll get us to 250k, and I think Coin could also match that, going from 100 billion to 500 billion. That's my napkin math for it. You can call me crazy or way too bullish, but just look at the broader stock market right now. Crazier things have happened, and if Tesla can be worth almost $1 trillion with the capital T, why can't Coinbase reach half of that? Assuming we get a Bitcoin bear market or a general stock market decline, I think Coinbase will drop most of that over the next 2 to 3 years and get back down to maybe a 50 billion market cap. My personal play is this: if BTC is looking healthy and if Coinbase doesn't drop too far in the first week, I want to buy some call options expiring end of year for Coinbase at double at what they are now. You could also just straight up buy some shares, but personally I'd wait at least a few days to see how things settle. Another galaxy brain play is to buy some exchange tokens like BNB, FTT, Uni, and all the other ones out there, since Coinbase going public will reprice those tokens to the upside. This has kind of already started happening, but I expect it to take off once Coinbase really hits the markets. I've looked into doing this, and some of them are difficult for me to access, but if they're easy for you to buy, that may be a smart play to do ASAP. And take all this with a grain of salt, because I'm just a guy on the internet sharing my fun thoughts, and I'm not a financial advisor by any means. After everything here, what do you think? Let me know down in the comments below what is your play so we can share ideas with each other. While you're there, please smash that like button. Also check out my exclusive deals for you in the pinned comment. For example, you can get up to 250 bucks in BTC by signing up for BlockFi using their interest accounts. I'm Kevin, hope you enjoyed this one, and I can't wait to see you on the next one. Cheers.